Hi there. A lot of people know that PayPal is quite undervalued at the current level. As you can see, the stock price has declined by over 80%. But there is something that many people don't know. You know what? Well, first let's check if you know all the facts. I mean all the catalysts that can make the stock price to go up. First, you might know that PayPal has some cash on hand. If you look at their balance sheet and add all their cash, they have in total of about 15 billion in cash. And compared to their market cap of around 66 billion, this is quite good. But don't forget about their debt of around 10.6 billion. So their net cash position is around 4.7 billion. Plus, as you may know, they also have earnings. This is a profitable business. And as you can see, they are making of around 4 billion a year. And their earnings are expected to increase more in the future. So, their free cash flow. You can see that their future outlook, based on the analyst estimates, is quite great. Their revenue, their earnings, and free cash flow are expected to grow more in the future. But why the stock price doesn't rebound? Why it stays down at this level of around $61? Because as you can see, PayPal is down over 17% year to date. And if you compare this performance to the S&P 500, you can see that the index is up 23% year to date. So there is a big difference. Moreover, PayPal had a decline in their earnings last year in 2022, but now their earnings have rebounded. They reported a higher growth rate for their revenue and also for their earnings. So the stock price should be up. But why it stay around this level of around $60? Why that? Well, maybe this is an opportunity for you and also for the company. Because if you look at their buybacks program, you can see that they still have 11.4 billion left for doing more buybacks. And at the current market cap of around 66 billion, that will be a return of about 15% only from buybacks. You can also see that the management has continued to do more buybacks in the past, especially when the stock price went down a lot. They started in 2021, they used over around 3.4 billion in buybacks, and during that time the stock price was quite high. But then it started to go down. And in 2020 and in 2023, they used over 4 billion for buybacks. So that's great. If the stock price stays around this level of around $60 or even less, and they keep doing more buybacks, they use of around 4 billion or even more 5 billion a year, then you can get a nice return only from buybacks. You might get of around 8% a year. So that's a good return. Now, why the market doesn't like this business? Why aren't more people investing in this company? Well, you also have to look at their future outlook. Because as you saw, the revenue is expected to grow more in the future, so their earnings. But be aware that these are the analyst estimates, what the market thinks about this business. However, as the stock price keeps staying down, the market doesn't like this business at all. Now let's see the important indicators that you can track. You can see in this image their active accounts, and in the right side the total payment volume. You can see that PayPal had over around 445 million active accounts in 2022, and their total payment volume was of around 1.3 trillion. That's quite a lot. And I think you already know how they make money. Based on this total payment volume, they charge a fee. Every time you make a transaction, you pay PayPal a small percentage. Of course, maybe you don't pay any fees, but your merchants will pay the fee for you, and they will charge higher prices for the products you buy or services. Now, as you've seen, the most important indicators are active accounts and the total payment volume. And if you look at the latest results, you can see that total active accounts was around 428 million in the last quarter, Q3 2023. And compare this number to 2022, 445 million, this is a small decline in the active accounts. And that's why the stock price went down. This is one reason. There are also others. Of course, the decline isn't that high, but if they continue to report lower and lower active accounts, that will be a problem for PayPal. So you have to be aware of this indicator. The second important indicator is the total take rate. As you can see, at the end of 2019, their total take rate was around 2.49%. And now, in the last quarter, the total take rate was around 1.91%. What does it mean, this indicator? Well, the total take rate is the total revenue divided by the total payment volume, which was around 1.3 trillion in 2022. So the problem is, the lower the take rates go, from 2.4% to 1.9%, the less money they can charge. And that is a problem. Of course, if the total payment volume keeps growing, and that growth rate is higher than the decline in the total take rates, then that will be a plus for PayPal. They'll keep making more money in the future. But as I said, there is something that not many people know, and that is their future growth rate. You have to ask the question, how much they can grow in the future. You can see in this table the total active users for each country they operate in. And of course also the population of that country and the market share of PayPal in that country, or the percentage of that population that uses PayPal. So as you can see, the United States is their highest market, where they have over around 150 million active users. So the market share is around 45%. Then Germany, United Kingdom, where they have over around 30 million for each country. And as you can see, they have a small market share, so they can grow more in these countries. Then Japan, with a large market share of around 19%, and other countries. Now, as you see this table, they still can grow more in the future. They can attract more users to their wallet and other merchants. Plus, as governments keep printing more money, the total payment volume will grow more in the future. But you also have to ask yourself whether the total take rate will go up or down. And that is another reason why the stock price keeps staying down. So to answer that question, you have to look at the competition. You can see in this table their main competitors, such as PayPal, Visa, MasterCard, Google Pay, Amazon Pay, Apple Pay, Stripe, Square, and of course Alipay and WeChat from China. In the next column you can see the growth rate in 2020 compared to the last year. And in the next one you can see their growth rate in the last 5 years. If you start analyzing their growth rate, you can see that PayPal doesn't grow that much compared to other competitors. Of course, also the total payment volume is higher. They had over around 1.2 trillion. Visa and MasterCard over around 5 trillion. But as you can see, the highest growth rate came from Apple Pay, Amazon Pay, and Google Pay. And this company can be a real problem for PayPal in the future, because they will take more market share from PayPal. I don't compare PayPal with Alipay and WeChat because they operate in China. And as you know, they are protected by the government. So focus on Amazon Pay, Apple Pay, Google Pay, and also Square and Stripe. They might gain more market share in the future. So, as there is so much competition, their take rates are likely to decline more in the future. Because if, let's say, Amazon Pay lowers their take rates to over around 1% and PayPal charges over around 1.9%, as it was in the last quarter, Q3, 1.9%, then all users will go to Amazon Pay. Of course, not all of them, but a big part of them will go to Amazon Pay. And to prevent that, PayPal also has to lower their take rates. Therefore, with lower take rates, the revenue is likely to be lower in the future. I mean their growth rate. And also their earnings. If you think that this company will grow a lot in the future, their earnings will double in the next 10 years, that may happen, you never know. But I don't think that PayPal is quite undervalued at the current level. The stock price may be fairly valued or a little bit undervalued, but it's down for a reason. And that reason, especially the main reason, is the competition. Just imagine the future. What online payments will mean in the next 10 years. It may be something like sending an email with zero costs. And if that happens, then a lot of these players will go out of business. Of course, this is the worst case scenario. That may happen. You also have to look at the upside. PayPal may develop other services. Also, the other players. They might come up with new ideas. That can bring more revenue in the future. But don't ignore the competition. The more players are in this industry, the lower their profits will be in the future. Everybody will try to attract more users to their platform, especially Google Play, Apple Pay, and Amazon Pay. They may offer these services for free, just to attract users to their platform and have more data about them, so that they can develop new services for them. Of course, this may not happen in the next 5 years, or the next 3 years, but we have to take into account this future outlook. I think that in the next years, PayPal keep making some money, they will deliver those profits of around 4 billion a year, or maybe less, 3 billion, you never know. And if they keep doing more buybacks, as the stock price is down a lot, then your return may be quite good at the current level. As I said, they may come up with new services that can increase their profits. And if that happens, then also your investment will go up. But don't forget the competition. Focus on the risk first. And if you have any questions about this company, let me know in the comments.